Economist David Blanchflower says that the people trying to solve the European debt crisis look like incompetence. That's one of the nicer things he says. David Blanchflower is a former member of the policy committee at the Bank of England. He's now a professor at Dartmouth and a Bloomberg contributing editor. Nice or not, you're a straight talker, which is unusual for a former central banker, which is one of the reasons why we're such fans here, David.
Well, you have to call it the way you see it. And I actually was in class this morning and we listened to the Larry Fink interview, and I think he has it right. There's restructuring that's got to happen all around Europe. There's issues of banks in Europe. The Greek problem is not over. We've been saying this over and over and over again. And I don't quite understand why the market rallied and thinks there's news in what we heard today. This is a recurring crisis that, Fink, I think, has it absolutely right. How these Greeks are supposed to pay off another expensive loan beats me.
No, Barclays equity strategist was on also saying he was confused as to why the market was rallying at news that Greece still can't pay its bills. But, I mean, are we framing this entire conversation incorrectly? I mean, is part of the fault in the framing of it? Should it be a conversation about bailing out the European banking system instead of it being labeled a sovereign debt crisis?
Margaret, I think that's what this has really been all about. And everybody, certainly the ECB and many of the European governments, have been trying to deflect the conversation away from that and try and point to saying it's a little problem in Greece, or maybe it's a little problem in Ireland. It's not a bigger problem. And what everybody's realised, Larry Fink, of course, said today, you need a European-type TARP. And at some point, the Germans and the French and Christine Lagarde and all these other folks are actually going to realise that we have a European banking problem. We had a set of stress tests before that weren't stressful. We're going to get one soon, and hopefully people will actually realise that we need to sort out the European banking system, and Greece is just the tip of the iceberg.
Well, what about that premise of a European TARP? I mean, NAMA in Ireland was supposed to be TARP 1, the original concept of TARP, which was to take on the bad assets. Instead, it ended up being about capital infusions. I mean, what version would you like to see for Europe?
Well, I think we have to have a broad-based one that really gets to grips with the real problems and doesn't just say it's country-specific. I mean, it's about banks and their exposure to bad assets European-wide. It's not just Irish banks. It's not just Greek banks. For goodness sake, it's about British banks probably. It's about French banks. It's about German banks. It's a more broad-based problem, and you can't keep sweeping it under the carpet, and then you get a little bounce in the markets because they think everything's fine, but it isn't fine. And if you go back to Greece, Greece hasn't fixed its oligopolistic practices. It doesn't have a decent tax system. All these things are going to take time. You've got to fix the banks first and give these countries time to readjust. It's not going to happen in 2.5 years. And growth gets compromised because you do silly things. What happens to make that change come about? I mean, is the nominal new head in IMF enough to cause a policy turn of the wheel? Well, remember, we're looking to see a new head in the IMF. We're probably going to see, we're going to see fairly shortly, a new head at the ECB. But I think they have to get to grips with the fact that this is a new paradigm, a new world. The ECB is not just there trying to control inflation. It has to get things back to normal and deal with the fact that we have a banking crisis. Banks aren't lending, and they still got stuck with bad assets. So your idea of put things into a bad asset type place is perhaps a fix, but this is just fiddling away at the edges of the problem, and it's making the overall problem worse.
Well, we're seeing in the U.S. a number of big houses bring down their growth estimates for the rest of the year because of things like we saw today with consumer confidence and housing prices. Is there a bleed over from Europe to the U.S. in terms of growth constraint?
Well, I think there is. I think there's a bleed over. I mean, I've always talked about the bleed from the US to Europe at the very beginning of this crisis, and now we're seeing this bleed from these struggling countries in the south, the sovereign debt crisis. But we've seen in the UK this week the OECD and a number of organisations lowering their growth forecast for the UK. And then today we get the poor consumer confidence numbers, the 8th month in a row that Case-Shiller is down. The Chinese look as if, China looks like it's slowing a little bit. So, the worry is that the world economies are slowing. And the last thing we want is another financial crisis, another financial bomb, if you like, to go off. And the worry is, I think the Europeans are bringing that into play.
Well, David Blanchflower, thank you so much for giving us your perspective.
Great to chat to you.
Great to chat.
Incompetence, maybe. We'll see next week whether they are competent and they've solved this, but I bet they haven't.
In a week's time, after we've been talking about it for all this long. But your bottom line is
a year's time.
Bail out the banks. Bail out the bankers?
Absolutely.
We'll see.
Bail out the banks, new TARP, new stress tests. We'll be back, I suspect.
I suspect. Thank you so much. David Blanchflower joining us from Dartmouth this morning.